Hello, welcome to EdaFace Media, which is part of EdaFace Ecosystem. I am Patricia. EdaFace is a user interface aggregator powering the decentralized world system using blockchain technology and artificial intelligence. EdaFace Media will be providing you with regular news updates about the emerging digital age. Therefore, subscribe to our YouTube channel to keep receiving up-to-date news. Disclaimer: the information provided in this broadcast does not constitute investment advice, financial advice, trading advice, or any other sort of advice. It is purely for your information, education, and entertainment. You can read our full disclaimer on EdaFace's website at edaface.com. Breaking news of the week. First breaking news: EU tightens crypto rules. The European Union is moving into the final phase of its market in crypto asset market regulation, with authorities warning that crypto companies without a valid market license must cease operations across the bloc by July 1st, 2026. Regulators have made clear that the end of the transition period marks a hard cutoff, meaning firms still operating under old national registrations will no longer be allowed to serve EU customers unless they have secured full authorization. Recent guidance from European regulators has added urgency, instructing unlicensed platforms to prepare for an orderly wind down, including halting new customer onboarding, stopping marketing activities, and limiting operations strictly to asset withdrawals and custody where necessary. Authorities have also emphasized that being in the licensing application process does not grant any right to continue operating beyond the deadline, pushing firms toward either full compliance or exit from the EU market. The impact is expected to be significant, with estimates suggesting that a large majority of crypto firms operating in Europe may lose access to the market if they fail to obtain approval in time. While larger exchanges are racing to secure licenses, many smaller platforms are preparing to shut down or relocate. The move reflects the EU's broader strategy to bring crypto fully under traditional financial regulation, aiming to increase consumer protection and reduce risks tied to unregulated trading activity. Second breaking news: Bitcoin gets political boost. The White House has signaled a stronger strategic shift toward Bitcoin, with officials and advisors increasingly framing it as a national strategic asset rather than just a speculative financial instrument. Recent statements from the administration highlight ongoing efforts to formalize a U.S. strategic Bitcoin reserve, with internal policy work focusing on custody systems, legal frameworks, and potential long-term accumulation strategies for government-held Bitcoin. At the same time, crypto policy momentum in Washington appears to be building, with advisors suggesting that clearer legislation such as the Clarity Act could unlock greater institutional participation in Bitcoin and broader digital asset markets. Officials have also pointed to Bitcoin's role in financial sovereignty and long-term geopolitical positioning, reinforcing the idea that it is becoming embedded in national economic strategy rather than treated purely as a private sector innovation. While no immediate large-scale government purchases have been confirmed, the ongoing development of a formal reserve framework is being watched closely by investors as a potential long-term demand catalyst for the next cycle. Third breaking news: Japan launches yen stablecoin. Japan has taken a major step toward mainstream digital finance with the launch of JPYSC, a trust-based yen stablecoin developed by SBI Group and Startale Group. The token is issued through SBI Shinsei Trust Bank and distributed via SBI VC Trade, marking one of the country's most advanced integrations of blockchain infrastructure with traditional banking. The project is designed to function within Japan's strict regulatory framework while enabling institutional-grade digital settlement. Unlike earlier electronic payment tokens, JPYSC is structured as a trust bank-backed stablecoin under Japan's updated Payment Services Act, allowing it to operate without the previous 1 million yen transfer and holding cap that limited earlier systems. Initially, the stablecoin will remain within a closed ecosystem for verified users on SBI's platform, with plans to expand to public blockchain networks once additional regulatory approvals are secured. The structure is intended to support large-scale corporate payments, tokenized assets, and cross-border financial activity. Crypto market analysis. The past week in the cryptocurrency market were dominated by a sharp risk-off move, with Bitcoin briefly dropping from the mid-$60,000 range toward the low $60,000 and at times testing the $59,000 to $60,000 zone before stabilizing. Ethereum and major altcoins followed a similar pattern, with ETH sliding back toward the $1,600 range and most large cap tokens posting weekly losses in the high single to low double digits. The sell-off marked one of the more volatile weekly stretches of 2026, driven largely by forced deleveraging and fading momentum after earlier attempts at recovery. The main pressure came from a combination of macro uncertainty and structural crypto-specific flows. ETF outflows and reduced institutional risk appetite continue to weigh on sentiment, while broader financial markets also shifted into defensive mode amid concerns about interest rate expectations and a rotation away from risk assets. Heavy long liquidations in derivatives markets amplified the downside, with cascading sell-offs triggering additional forced exits and accelerating intraday volatility across both Bitcoin and altcoins. Despite the drawdown, the market showed early signs of stabilization toward the end of the week. Bitcoin managed to reclaim levels around the low to mid $60,000 range, while on-chain behavior suggested long-term holders remained largely unfazed and continued accumulating. Sentiment remained in extreme fear, but the absence of broad panic selling indicated that the move was more about leverage reset and macro repositioning than a structural breakdown in demand. Eda Coin update. The NFT marketplace, which is the fifth component of EdaFace, has successfully passed through the various stages of development and is now in its testnet phase, where it is being integrated into the single sign-on system of EdaFace Ecosystem. What is unique about the EdaFace NFT marketplace? Friends, EdaFace NFT marketplace has unique features such as 1. 3 market arenas. EdaFace NFT marketplace is uniquely divided into 3 arenas for each of the 3 kinds of non-fungible tokens NFTs, which are art, collectible, and gaming NFTs. This division allows users easy access and navigation across the platform. 2. Multi-chain capability. The unique thing about EdaFace NFT marketplace is that it is a multi-chain platform. This means it can accept non-fungible tokens from different blockchain platforms such as Ethereum and BNB-based platforms. 3. Intra-chain transfer. Non-fungible tokens can be minted on other marketplaces such as OpenSea or Binance and then transferred to EdaFace NFT marketplace for display to the teeming EdaFace community. Likewise, users can mint NFTs on EdaFace marketplace and transfer them to other NFT platforms or reserve them in their wallets. This is an intra-chain transfer, which offers flexibility to NFT transactions. 4. Varieties of minting. One unique feature of EdaFace NFT marketplace is that it has 7 minting formats, which are single minting, unimultiple minting, polymultiple audio minting, polymultiple image minting, polymultiple video minting, layer by layer minting, and lazy maintenance. No other NFT marketplace in the industry offers such a variety of maintenance. Thus, placing EdaFace NFT marketplace over established platforms such as OpenSea, Binance NFT, and Rarible. EdaFace NFT marketplace brings more utilities for Eda Coin. Watch out for its mainnet version that will unveil this unique platform to the world very soon. Introducing EdaFace Mall, the future of decentralized shopping. EdaFace Mall is a blockchain commerce platform that links physical products to online services using both cryptocurrency and fiat payment systems. It is a decentralized digital shopping platform that revolutionizes e-commerce with its novel built commerce that enables secure crypto-powered transactions. Note that B-commerce refers to blockchain commercial activities. With a peer-to-peer marketplace, global accessibility, and blockchain-backed security, users can shop and sell effortlessly using cryptocurrencies. Say goodbye to intermediaries and hello to a seamless, borderless shopping experience. Explore the future of online commerce today. You can access the EdaFace Mall by visiting its official website at mall.edaface.com.